Good afternoon, traders. This is Christian Farmhurst, Tribeca Trade Group, and this is your end of day as well as your end of week market recap for February 2nd, the second trading day of February. And wow, this has been an interesting week. A lot of event-driven week. We knew it was going to be an event-driven type week, but each one of these events this week, whether it was more on the micro side with earnings, or whether it was on the macro side, there was basically something for everyone, depending if you're bigger picture macro type person and you focus on interest rates and the dollar, or it was also very interesting if you focus more on earnings reports and on company specific news. So I will go through a couple of those. I'll try to give you the big picture. And as always, when we look at the market, right, we're looking at several different factors, and we don't always, we're not going to have perfect information to make conclusions on. Most days, some days we see things a little bit more clear. But other days we have a mixed type of, amount of factors. And, I think looking at the jobs report and, we had a Fed meeting as well. Some of those things can be a little bit, murky when you look at the overall picture. But, again, we try to, figure out what the takeaways are of the report, as well as more importantly, what the market moves are, because that is telling you a lot of information, and that can help you make some decisions with the best of available information out there. So I will try to do that for you. I will try to kind of give you a glimpse of some of the most important takeaways that I thought were from this week. First things first, first disclaimer: everything that I'm going through is for information purpose only, not giving out any advice or recommendations. So let's talk about some of the positives. The S&P made a new high today. We could begin to kind of look at that. I think a lot of that was earnings driven. Sure, a couple of the bigger names made some of the big moves. I mean, not a surprise that Meta, Facebook, and Amazon, they are two very big companies. But here's where we are, and I could tell you from the trend and the price alone, look at where we started the month. It was going to be a question of whether or not we were going to kind of break the trend here, and we didn't. We kind of came in and tested the 20-day moving average. One of the things one of the takeaways for me is just how fast this market moves. On something like we saw on Wednesday, where we closed, pretty much on the lows of the session. It was pretty nasty price action to the downside during that press conference that Powell had. I would say, hey, would not be surprised at all if there was some downside movement follow through. And just this market just seems to kind of adjust so quickly. And it was a 1 day move, and it's amazing that just 2 days later, the S&P is back at new highs, right? And just to kind of give you a sense of how this unfolded this week, there was that test of the breakdown, and it held, and buyers are in there and kind of pushing the market back up, and we closed pretty close to the highs of the day. We did come off the highs a little bit there. Let's talk about the Qs for a minute. And it's funny because the Qs, to me, look like they were showing a little bit of relative weakness at one point this week, right? How we started, or I should say, how we ended the last trading day of the year, which was the Fed day. We closed on the lows here, and it looked like that we were going to open up pretty decently inside the value area for the month of February. And in fact, we did come in and we tested the 20-day moving average. And it was a very quick test of the 20-day moving average, because Qs, instead of underperforming, outperformed quite nicely today. And that's a new closing high for the Qs. And there was a test of the 20-day moving average, and we're back above value. So price is king. I'm going to go over a couple other things here too, but price is king. IWM, we know that this has been kind of a mess. A lot of whippy price action, of some mixed signals, right? This candle looked really good, then you have an inside candle, and then we kind of completely collapse. This has been kind of, in my opinion, par for the course in terms of what we've seen in IWM over the last year. There's been just a lot of these edges where, and if you don't believe me, we can kind of go back and look at the weekly chart. Every time we've kind of looked like we're going to break out, right? This was back January of the end of last year. Almost a year ago. Then we also tried here in July. We came back in, almost looked like we were going to break down, false breakdown there. We come back, really catapulted higher at the end of the year when Mr. Powell hinted that they were getting more dovish and there could be rate cuts. Again, I don't want to rehash that, but I didn't really understand it at the time. This Fed meeting made more sense to me because they have not won the inflation war yet, right? They're not at the target of where they want to get to, which is 2%. We're not there yet. So why would they be cutting interest rates ahead of getting to the inflation target? I don't know. And I don't know why I don't know why he was that dovish back in the December meeting. But our job is to kind of adjust to the market, not argue with the price action, take what's given to us. So yes, for now, price is holding in there above just inside the value area and above the 200-day moving average. Now, I want to talk about a couple other things. So that's the indices. I always start with the indices, the big picture. I will talk about some of the earnings moves too. But I thought what was really interesting today was the move in bonds, which if you're a regular viewer of my video, that I discuss bonds quite a bit, and also what the dollar did. Right. So let's start with the bond move. And we could look at TLT if we like, but this was a big one-day move. I thought yesterday was a big one-day move too. But here's where we are, and we're back at the 200-day moving average. So it's kind of like the not so fast, very close to taking out that VPOC yesterday. Within kind of within a hair there of taking out that upside VPOC, but a movement back down. Now, to me, my view, I'll always insert my view into these videos, but if we go sideways here in TLT, I think that's fine. With the whippy price action, it is what it is. Whippy price action is a little bit harder to deal with when we really rip up to one side and then, fall back hard the other day. But when you're looking at the overall trend, we're right at the 200-day moving average. Now, despite this down 2.2% day, I also think it's really interesting to look at what TLT did for the week, because as we know, as most people are familiar with, one day is not a trend. So how did this go for the week? Whoops, 2000, not 2000. I'll get it right. TLT actually finished up for the week, right? So again, ignore this Friday day. I just have to include that as the close to get the calculation right. But you could see with your own eyes here that TLT had a positive week. Again, very whippy price action, 4 big up days, right? Almost all of them. If you round up, you had, let me go about this differently. Monday, plus 1.2%. Tuesday, plus 90 basis points. Wednesday, plus 1%. And then yesterday, up 2%. So we really just took out yesterday's price action and a little bit more to still finish up 2.8% for the week. So you kind of have to say, like, if you were really passionate about what happened with bonds today, then you should have been even more passionate about what they did earlier in the week, because I saw a lot of people talking about what TLT did today, but you got to take it with the whole week, right? So to me, not as concerning with what bonds did today. Of course, that means that some groups are going to be kind of stuck in the mud, I would say. I think, names that are more susceptible to higher interest rates, right, didn't have such a good day today, right? And you could kind of see that on my spreadsheet. Right. What did worse today? Well, OIH has been kind of that has a separate story going on, but the clean energy stocks, right? The solar stocks, right? Gold miners too, right? And that's also dollar driven too, which I'm going to talk about next, right? So what did the dollar do, right? And we could look at, if we want to look at do the same exercise here with UUP, right? You could see that the dollar was stronger, and this was a big move today, right? This was different than bonds, because this was almost twice as much as the move down yesterday. And for the week, the U.S. dollar ETF was stronger by 60 basis points. Is that a huge, humongous move for the week? No, it's not that bad, but I think it's something that we definitely want to keep an eye on, right? That's a pretty ugly looking bullish engulfing candle for the dollar. So stronger dollar, and that's not typically very good for equities when you see a stronger dollar like that. However, I like if you're drawing some type of like inverted head and shoulders here, just like with a regular head and shoulders, we've got to break the neck pattern. We've got to break the neckline here. So, if this follow throughs and we see another big update on Monday, that would get me concerned, right? Because that's not just, one day is a trend. It's would be more than that. So that I think this will be another must watch for next week is going to be what the dollar does. And yeah, it's concerning. But we also had a move up in the beginning of, at the end of November too, and nobody was hollering about that, right? That was actually a bigger move from the lows to highs. This didn't really affect stocks too much. So you kind of have to keep that in the back of your mind. One day is not that big of a deal. All right. But we'll be watching this closely. The other thing, another situation that I'm hearing about a lot, right? And you could see on the bottom left of your screen, right? This is, market breadth. Market breadth was not particularly good, right? Well, look at what IWM did today. It was down 0.5% today, right? And that's 2,000 stocks, that are in that. So, yeah, I mean, I would call that a bit of a divergence for today. I would also look at, we could look at some of these trends too. Right. One of the things that I tend to look at is new highs versus new lows. There's been issues with that so far this year. Right. We know that breadth has been trending down for most of the month. Here's what new highs look like. Well, it's tough to really complain about this. You had 69 new 52-week highs and 4 new lows. Now, when we look at the chart of this, now this is delayed, by the way, so I don't think it's going to include today. What was the percentage that we had here? The percentage was 14. So 14% of the S&P made a new high. I believe that's the right way to interpret that. 14%. So if we go back to this chart, right, and we're looking at this, let's see if I could blow this up a little bit. Oh yeah, look at that. Right. So a lot of people are talking about this, right? And this is an issue, right? The S&P, so the number of new highs, while it should be back into this region today. Again, this won't show today. You could see here, right? But this is this should be in here. So yes, it's not breaking out, it's not a new highs with the price action for the day, but it's also not terrible either to see it up this high. New lows, I don't think that this is this much of an issue either. How many was it? 3 or 4 names, right? Oops. You had 4 names make a new 52-week low, right? Bristol Myers, which is lagging the healthcare. You've got a utility in there, and you've got two material names, or 2 like grain type names. All right. What about the 4? I also look at not only the 52-week, but also the 4-week. And this is just for the S&P, by the way. Notice that the NASDAQ had more new 4-week new lows. So again, IWM is a good portion of that. IWM is not, we already went over that. It's not behaving well. 106 new 4-week highs today. So that's not bad. I mean, it's not as robust as, you may want it to be. But 106 new highs versus 50 new lows, it's not a perfect market. And it rarely is a perfect market. So that's kind of my takeaway. And I think that we've been talking about that for most of this month. I've been complaining about the breadth, right? And looking at the McClellan summation index, right? It has not been by any means a perfect market. But are there some really good things going on? I would argue, yes, there are some very good things going on. Let's take a look at some of the movers today, right? And this might help a little bit, right? So again, everybody, all the news and everything is focused on Meta and is focused on Amazon. I don't blame them a little bit because they're very two big companies. And I get it. They're big moves up 20%. Right. And the attention was on, and also Apple, which I think finished down on the day. Right. That's rightfully so, to spend some time on that, just as with Microsoft and Google earlier in the week. But what else happened here for the day outside of what you're going to hear in the headlines? Right. Deckers was up 14%. SAIA, horrible symbol, by the way, trucking firm, was up 14% today. Right. Is that, is that terribly bearish to see, a big, a retail company, a trucker? Well, let's keep going with this exercise. What else was made a new high today? Well, there's a lot of pin action in things. Granger, right, which is a industrial type company. Again, these are not new highs. This is just the performance of the day. But take a look at what's going on with the industrials. A brand new high today, right? This is a chart that I've been going over quite a bit, right? I've talked about how the industrials were on the cusp of a breakout. They're not on the cusp of a breakout anymore. They are breaking out, right? So I view this, and some of the earnings reports that we've seen have been stellar. I don't know how you can complain about what United Rentals has done, right? What's the other name? Parker Hannifin. I'm going to get the symbol wrong here because I don't trade this one. If I go back to the new highs, we'll be able to do this a little bit easier. So let me go S&P, PH. I was close. Again, it's been a long it's been a long week. All right, so here's PH. Parker Hannifin, right? Industrial type company. Going out to highs. How are they doing this, or how are they executing this well in a pretty difficult environment? I don't have the answer for you, right? Because we know what China has been doing, but very, very strong. And you could go through, more names here, but Caterpillar, which hasn't reported earnings, that also made a new high. What about this company, Eaton? Crushed it on earnings, absolutely crushed it. And there's a lot of, so here was the reversal in Granger, by the way. I saw this name down, but look at Granger out to new highs. So, and again, this is not just one company in the industrials. If I can remember, which I probably won't, and I'm long this thing, the equally weighted industrials RSPN. Industrials ETF. Look at this, the equally weighted industrials ETF out to new highs. So yes, as you could tell, I'm bullish on what the industrials are doing. Healthcare, it's another group that I've been watching closely, close to new highs, right? You had some good earnings results in here, right? But just to kind of show you a couple groups outside of outside of the communications group, which has made a new high today, right? And that mostly is Meta. Very strong there. FTN, which is the internet ETF, that also made a new high today, right? So there's quite a bit of good price action going on here. Let's talk about the week performance, this week's performance, and then we'll talk a little. What else we covered some earnings. I didn't cover all the earnings, but we talked a little bit about the jobs number. I'm not going to dissect the jobs number because I'll let somebody else who knows why those wages went up as much as they did. But XLC, FDM, which we just talked about. But yes, rates in the dollar, things like, IWM are going to have a trickier time. We're going to have a tougher time. Solar names, gold miners, they're going to have a tougher time with the dollar and interest rates going higher. Let's talk about the performance for the week. All right. Again, does this look like horrible breath to you? Well, the consumer discretionary ETF was your best performing sector. Communications, we already talked about them. The home builders, they're close, and it's pretty amazing to me that they continue to do this even on a day. Now they're close to breaking out, right? Builder, which I'm long, did get a breakout today, right? But I'm still watching this group. This was tricky a couple weeks back. Right. So we don't know. This could be some type of a consolidation and then break back down. Right. You have to be open to those possibilities. Right. All we're doing is we're evaluating and the possibility of things. Right. This did not close above its value area. So that could be a clue. So I'm not overweight the home builders anymore. For a few months I was, but I have builder on and I have Pulteon in my longer term portfolio. But if those don't work, I almost took them out when I saw this break, and I just gave it a little bit more time. And again, we'll see if this happens. For now, it's just consolidation in an uptrend. All right. So home builders had a good week. Internet. Yes, the staples. I know that they're getting a lot of attention, or they got a lot of attention. They're interest rate sensitive, right? So I think that the staples, the utilities, right? They're not going to just sit there when TLT goes up like it did this week, 2.4%. Right? They're not just going to sit and wave by and say, "Oh, geez, rates are going lower," right? They react to what interest rates. They heavily react to what interest rates are doing. There's the industrials up 1.9%. The semis. Aerospace and defense retail was up 1%. The financials were also up 1%. Right? That's the good. The bad was the situation with the regional banks. Holy cow, down 7%. Also, OIH went down on the. I guess Aramco is increasing their production. Not good for some of those companies there. The Chinese internets continue to be an absolute mess, down 5.6%. All the banks too. Down 4.6%. Again, notice why XLF was up this week, right? It's much different. It's much different than just the banks, right? Insurance companies are about 30% of the XLF. Steel also actually turned in a negative week, even though there was some good earnings from Nucor, Cliffs Resources, and energy underperformed. So there you have it. Interesting. South Korea had a really big week as well as India. I have to say, I really like what's going on in some of the India names. Look at the EPI ETF is breaking out to all-time high. I like this IBN, right, which is now it pulled back a little bit into support. And I also like Info, right? Whoops, sorry, that's the wrong Infi. Like I said, it's closed right at the top of value. All right, so there you go, guys. That's it for the week. Here's how my watch list performed. So important things here, right? So if you want to be a member of Tribeca Trade Group, go to tribecatradegroup.com and you can click on there, go into the products, and you could easily become a member of the Tribeca Trade Group. What do you get for being a member of the Tribeca Trade Group? Well, here's our watch list. I compile this every week or weekend, right? Notice the names that are in gray. Those are the names that I carry over from the previous week that still look good. So I do that review, every week. And and then I put in new setups for the weekend, right? You could see this is from the weekend, right? And then what I do is I add names as we go through the week. Percentage from trigger is not the overall just plus or minus performance, right? We have triggers based on the market web's system, which uses volume at price. So I do look for breakouts. I like to also see breakouts on multiple time frames, but that's where that's where that trigger comes from is a breakout of the value area for the respective period, right? So, but very good. This one, of course, was the name that I just mentioned in trucking, right? That name was showing strength beforehand. Amgen did very well. KKR, which I've been bullish that name for a few weeks. The coal names continue to do well. AMR is the leader in that group. CrowdStrike, which I want to review that chart with you real quickly. I think that's also definitely one to keep on your radar for next week. I know it's a bit extended here. Did not close above its value area, but so that will be on the watch list next week, and you'll get the chart set up from me as well. So all the charts going here. Every one of these names, as well as every trade that I take, gets the backing of the chart set up and what I'm looking for. All right. So chart after chart after chart after chart. Anything that I tend to put on the list has that included. Snowflake, we'll also review that chart. I think this was very interesting. I don't regularly trade Snowflake, but I have to say the chart is pretty darn good looking. Now it's going to have earnings at the end of the month. But, this is now breaking the base, right, to the upside. So really nice retracement. Notice that you could see for the, when we use trading view, you could see multiple time frames on one chart, right? And you could see how this is breaking out. So pretty clean breakout. It has to get through that virgin point of control that's on that chart, but very nice looking. A few other names too. Datadog, very impressive. Trex, right, actually did okay today. I came back quite nicely. And DraftKings, right? DraftKings, very nice looking as well, break higher too. All right, guys, that is it. And your other option to get involved with Tribeca Trade Group is to go to our Substack. That's an easy one, ttdtrading.substack.com. You'll get both included if you sign up for the regular membership at tribecatradegroup.com. Guys, have a great weekend. And again, if you sign up now, you'll get the watch list on Sunday night, as well as all the setups. What I typically do is I will take as many setups as I can from the watch list, depending on how we start the week, and we go from there. But you will find I take a good number of my trades, which you will also see on a daily basis, as well as how they're marked to mark every day, and they're sent out on a daily. They're actually, my position sheet is set out twice a day to members. All right, guys, have a great night. See you tomorrow.